The Precious Metals Week in Review, September 25th, 2015. Brought to you by Precious Metals International. Markets continue to be volatile as evidence grows that the global economy may be slowing further, with China's sluggish economy apparently the leading factor in the slowdown. The number of Americans filing new claims for unemployment benefits rose by 3,000 claims to a new seasonally adjusted level of 267,000. U.S. Federal Reserve Chair Janet Yellen tried to repair some of the damage caused by the decision to hold off on raising interest rates last week during a speech on Thursday, in which she said it would likely be appropriate to raise rates sometime later this year. Ms. Yellen continued to note that any decision to raise rates would remain data-dependent, so once again, all eyes will be on the upcoming September non-farm payrolls report. U.S. durable goods orders dropped 2% in August, signifying a possible slowdown in U.S. manufacturing as a strong dollar and China's slowing economy weighed on exports. Oil prices are also weighing on heavy machinery orders as falling oil prices have triggered cutbacks by energy and oil exploration companies. U.S. Fed Chair Janet Yellen, in a speech that she gave on Thursday after markets closed, seemed to be making an attempt to reassure investors that a rate hike would still occur this year. Ms. Yellen was quick to note, however, that the Fed remains data-dependent in its considerations on the appropriate time to raise rates. Ms. Yellen's speech, along with an upward revision to the second quarter gross domestic product figure for the U.S., seemed to be giving a boost to stocks early on Friday. Jonathan Golub of RBC Capital Markets said Ms. Yellen's speech, which seemed to contradict the Fed's decision not to raise rates last week, has resulted in a loss of credibility to the central bank. Mr. Golub told CNBC's Squawk Box program when discussing Ms. Yellen's speech and other Fed member remarks this week that they took an unsettled situation and they just threw kerosene on that fire through all of their statements. They didn't fix this with one speech. Amid rumors of yet another chance that the U.S. government may be nearing a shutdown due to gridlock in Congress, House Speaker John Boehner announced on Friday that he would be resigning from the post of House Speaker, as well as vacating his congressional seat itself in October. Analysts are split on whether the Speaker's resignation will increase or decrease the likelihood of another government shutdown. In Japan, core consumer prices dipped year on year for the first time since August of 2013, according to government data released on Friday. The Core Consumer Price Index, or CPI, dipped 0.1% in August from a year earlier. Analysts and investors alike believe that declining inflation in Japan will force the Bank of Japan into another round of monetary easing. Just as happened in the U.S., hopes for further intervention by the Bank of Japan seem to be the sole factor lending support to Japanese stocks. On Wednesday, the Caixin Market China Flash Manufacturing PMI data was released and the number was the weakest since March of 2009. The flash reading for September came in at 47, down from August's 47.3 and lower than forecast. Any number below 50 indicates contraction in nationwide manufacturing in China, and the lower reading falls in line with recent economic data releases indicating China's economy continues to slow. The recent spate of poor economic data out of China has led many banks to revise their growth figures downward. Standard & Poor's, in a report released on Monday, said credit risks in the Chinese economy may continue to worsen, as indicated by rapidly rising credit losses and still significant credit growth amid China's economic slowdown. We believe there is a 1 in 3 chance that the banking sector's credit exposures to non-financial and non-public sectors in China could surpass 150% of the country's GDP in the next 2 years. S&P also said that the risk of a downturn in China's property market remains high and exposed to a correction. Syriza remained in power following the weekend's elections in Greece, with Alexis Tsipras regaining the prime minister position and strengthening his mandate from the Greek people. Syriza appears to have won 145 seats in the 300-seat Greek parliament and appears set to form a renewed coalition government with the Independent Greeks Party. The re-election of Tsipras and his Syriza party by the Greek people will hopefully mean that the ongoing negotiation over additional bailout funding for the beleaguered and debt-laden country will continue uninterrupted. In mid-October, there will be an assessment by Greece's creditors of its agreed-upon reforms program, which, if successful, will result in the release of more bailout funds. Elsewhere in Europe, the Catalonia region in northeast Spain is gaining focus as it undertakes its own elections over the weekend. The region has long struggled for independence from the rest of Spain and has been threatening to secede from Spain for quite some time. If pro-independence parties gain power in the weekend's elections, then that threat of secession may take one step closer to becoming a reality. Catalonia's president, Artur Mas, said that if the pro-independence coalition of parties fails to gain majority in the elections this weekend, he may resign his post. Crude oil remained stuck in the $40 range as there were continued signs of weakness in the Chinese economy that heightened fears of further global oversupply of oil. The euro began the week moving downward against the US dollar and continued falling through Wednesday when it began turning around. The euro climbed higher through late Thursday and then saw a sudden downward surge once again. The euro appears set to close the week lower against the US dollar. The Japanese yen had an extremely volatile week against the US dollar, swinging higher and lower all week. The yen surged higher on Thursday but quickly peaked and moved lower once again. The yen also appears set to close the week lower against the US dollar. Volatility should be expected to continue. Further evidence of an ongoing and global economic slowdown had markets on edge this week once again. China's continued economic weakness, along with evidence of additional slowdowns in several European economies, have analysts and economists alike throwing around the words global recession once more. The escalating migrant crisis in Europe is also acting in concert with growing economic weakness to place further political and socioeconomic strain on many peripheral European countries. Greece, already fighting massive unemployment numbers among its own people, has become a landing point for many Syrian refugees trying to enter Europe and escape the growing conflicts across the Middle East. The associated cost of handling those inbound refugees can do nothing but add to Greece's already massive debt load and escalate the plight of those Greeks who have been unemployed for many, many months. In an effort to stem the incoming tide of refugees into Greece and Hungary, the European Union has pledged €1 billion to help United Nations agencies support Syrian refugees who remain in the Middle East. The proposed plan could see aid funds flow into Lebanon, Jordan, and Turkey, all of which have been some of the key access points for Syrian refugees seeking access into Europe. Elsewhere in Europe, Catalonia will be holding elections this weekend, and it is widely expected to see pro-independence parties gain control. The region has long made its case for independence from the rest of Spain, and if the pro-independent parties win in this weekend's elections, yet another region in Europe could soon hold a referendum on secession. Catalonia is one of the more prosperous regions of Spain, and its exit would do serious damage to the overall Spanish economy. In Asia, China continues to show signs of a weakening economy. The Caixin Market Flash PMI rating for September came in at 47, below expectations and below the level of 50, which would indicate that the Chinese economy is expanding. The property sector in China also continues to experience trouble, which could create additional downward pressure on a large portion of the Chinese economy. In the United States, the U.S. Congress was thrown into turmoil on Friday as House Speaker John Boehner announced his resignation from his post as Speaker as well as his seat in Congress. Mr. Boehner has faced increasing pressure in his role as House Speaker from both sides of the aisle, Republican and Democrat. The most recent stalemate, which has once again threatened to cause an imminent government shutdown, seems to have been the tipping point for Mr. Boehner. His own Republican colleagues cheered Mr. Boehner's departure when Senator Marco Rubio announced the news of his resignation. Senators and analysts alike are unsure if Mr. Boner's exit will avert the looming shutdown, which appears to be the result of a hotly debated funding bill. Once again, as has seemed to continually be the case of late, it will remain vitally important to monitor global news outlets this weekend for items which could have an effect on the price of precious metals. The heightened uncertainty over the true state of the globally connected economy seems to have piqued interest in ownership of physical precious metals as part of a well-diversified investment portfolio once again. Wise investors continue to take advantage of opportunities to acquire more physical precious metals for their portfolios when presented with the opportunity to do so. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, September 25th, 2015. Brought to you by Precious Metals International.